This CTA screencasting project is supported by the South African Institute of Chartered Accountants and the Auditor General of South Africa via the Tutuka program. As part of discussing IFRS 15, I will focus on the 5-step revenue model. Each step will represent a separate screencast. In this last screencast, I will now discuss the 5th step of the revenue model, recognize revenue as or when the entity satisfies a performance obligation. An entity shall recognize revenue when or as the entity satisfies a performance obligation by transferring a promised good or service, for example an asset, to a customer. An asset is transferred when or as the customer obtains control of that asset. Control of an asset refers to the ability to direct the use of and obtain substantially all of the remaining benefits from the asset. An entity shall determine at contract inception whether it satisfies the performance obligation over time or at a point in time. If an entity does not satisfy a performance obligation over time, the performance obligation is deemed to be satisfied at a point in time. An entity transfers control of a good or service over time and therefore satisfies the performance obligation and recognizes revenue over time if one of the following criteria is met. The customer simultaneously receives and consumes the benefits provided by the entity's performance as the entity performs. When will the customer simultaneously receive and consume the benefits? If an entity determines that another entity would not need to substantially reperform the work that the entity has completed to date, if that other entity were to fulfill the remaining performance obligation to the customer. The entity's performance creates or enhances an asset that the customer controls as the asset is created or enhanced. To determine this, the requirements for control in IFRS 15, paragraphs 31 to 34 and 38 is applied. The asset can either be tangible or intangible. The entity's performance does not create an asset with an alternative use, and the entity has an enforceable right to payment for performance completed to date. An asset created by an entity's performance does not have an alternative use to an entity if the entity is either restricted contractually from readily directing the asset for another use during the creation or enhancement of that asset, or limited practically from readily directing the asset in its completed state for another use. For each performance obligation satisfied over time, an entity shall recognize revenue for a performance obligation satisfied over time by measuring the progress towards complete satisfaction of that performance obligation. An entity shall recognize revenue for a performance obligation satisfied over time only if the entity can reasonably measure its progress towards complete satisfaction of the performance obligation. Appropriate methods for measuring progress include output methods and input methods. If a performance obligation is not satisfied over time, an entity satisfies the performance obligation at a point in time. To determine the point in time at which a customer obtains control of a promised asset and the entity satisfies a performance obligation, the entity shall consider the requirements for control in IFRS 15, paragraphs 31 to 34. Control of an asset refers to the ability to direct the use of and obtain substantially all of the remaining benefits from the asset. Control includes the ability to prevent other entities from directing the use of and obtaining the benefits from an asset. The benefits of an asset are the potential cash flows, inflows, or savings in outflows that can be obtained directly or indirectly. Now let's do an example. An entity enters into a contract to provide monthly payroll processing services to a customer for 1 year. Discuss whether the promised goods and services to be provided in terms of the contract are satisfied over time or at a point in time. The customer simultaneously receives and consumes the benefits of the entity's performance in processing each payroll transaction as and when each transaction is processed. The fact that another entity would not need to reperform payroll processing services for the services that the entity have provided to date also demonstrates that the customer simultaneously receives and consumes the benefits of the entity's performance as the entity performs. Revenue should be recognized over time by measuring progress towards complete satisfaction of the performance obligation. The illustrative examples number 13 to 19 in Part B of IFRS 15 provides additional examples on Step 5 of the revenue model. recognize revenue as or when the entity satisfies the performance obligation. Thank you for your time in participating in the screencasts. I hope you enjoyed it and learned new principles from each screencast. Good luck in your preparation for the test.